Alrighty, folks. Hey, thank you so much for being patient. Man, those were some wise words of wisdom from our commercial sponsors, weren't they? Absolutely. But we're back. Patrick Franz, the Note Mentor, Real Men of Real Estate radio show here on KCAA Radio. I'm with my guest, Desi Arnaz, professional investor, transformed into fund manager. And right before the break, we were just talking about how Desi was venturing into raising OPM, other people's money, at some point to start building up his note portfolio larger and faster than he could do with his own financial means. And that's how it all got started, right, Des?
Yeah, that was it. And what I found is that people started, I want to see it this way. People started throwing their money at me. When they learn about notes, they're like, wow, this sounds great. I've got money. And I found myself really kind of almost in another job, just trying to find more notes to buy. And we're buying these notes individually, and I'm preparing all these individual partnership agreements and working with lawyers and all that stuff. And it just got really hectic for me. When at the end of the day, what happened, what my partners wanted, they just wanted a good return. They wanted someone else to handle all the work, right? And that's what they wanted. And what I wanted to do was buy more mortgage notes. And so I learned about something called pooling people's funds together, right? Where you take a little money from this person and this person and this person, put it all together. But in order to do that, there are some legal hoops that you need to jump through. You need to dot all the I's and cross all the T's to stay compliant. And so I decided that I would look into that. And it led me to a securities law firm that prepares documents so that investors like myself can pool people's money. And that's called a fund. And that's what I do now, Patrick. I manage a fund.
Yes, and I noticed you have the logo right behind you, right? So your fund is called Everly May Capital Group.
Yes,
the Everly May Capital Group. And so, what Desi's saying here is that, he grew his personal investing business to a point where he needed to go after other people's money and get partners and those kinds of things to grow his portfolio more and more. But you start to think then that's doing onesie twosies. That's finding one note investment to get one financial partner involved with and having to repeat this process over and over. And if you've gotten to that level, there's really only one way we could see, right, that you could grow or level up that business that was already very successful. And that is not just do one asset and one investor partner and manage all that, but it was to try to pool a whole bunch of people's money together so that you as the professional, you as the fund manager with all of your expertise in the note investing profession could be a good steward of their money, but have more money at your behest to be able to buy maybe larger quantities of these notes, maybe pick up larger portfolios of these notes rather than just buying one at a time. Is that right?
That is exactly right, Patrick. You nailed it. And it also gives me the ability to buy larger notes, we don't just have to buy little houses. We can buy mortgage notes on commercial properties. We can buy mortgage notes on skyscrapers. You know what I mean? We can really play at another level because it's not just me and my buddy Joe and his money, it's all of our money together in a pool, in a fund. And so I have a $20 million fund that I manage. That was the first fund. We have two funds now. The first fund was a $20 million fund, or is a $20 million fund that I manage. And that fund is primarily investing in notes and doing some private lending. And so that's a big part of what I'm able to do now. I'm able to buy in larger bulk. I can walk into a bank and I can say to them, look, I can write a fat check if you guys want to sell me a bunch of mortgages at a good price, right? And I get mortgages at better prices now than I ever did when we were buying them one at a time. And that means there's more profit in it for me and all of my investor partners.
Yeah, I always laugh at people shopping for groceries at Costco versus the grocery store, right? Yeah. Save money, buy in bulk. It's always funny to leave Costco with a 17-pound jug of peanut butter. But you saved money, you bought in bulk. But same thing goes, right? If you're going to buy one note at a time from maybe another note investor, a fund manager who holds notes in their fund, a bank, a credit union, you're buying one note at a time. First of all, it doesn't move their needle enough to think you're special. And their pricing is going to be at the highest because you're only buying one. It's the same thing of buying small bulk in life. If you can buy larger bulk, you can save money on the purchase. And that's what you're saying you were aiming for when you started a fund.
Mm-hmm.
Now that's exactly neat, right? Because as a fund manager, as a professional like Desi, you have this expertise, and to grow the business, you need to have more money at your behest. So this is what it looks like from a fund manager's position, right? Desi, from your spot, you're saying, hey, I'm an expert at this. I'm good at it. I got it dialed. I'm doing good for my investor partners. I'm doing good for homeowners. I've got my systems in place. How can I grow? I need more money. Right. Mm-hmm. And that's what it looks like for the fund manager, because now you have people pooling money into your fund that you're managing those dollars and being a good steward of their money and trying to make profit for themselves, for the investors in your fund. Number one concern. Mm-hmm. And number two, if you're good enough at it, there's going to be extra profit that you get to keep as the fund manager. And that's the incentive, right? Desi's incentive to himself is, hey, if I do a good job running this fund for 7 years or so, hopefully I make enough profit, certainly to pay back my investors what they're owed and plus their returns, but also there should be some extra on top of that because you're so good at doing what you do, to where that's when you really get compensated at the end of the day. Now, but how does that look for an investor? Right? So there's the investor side, folks. Like, you're an investor. Well, hey, maybe these guys talking about mortgage notes, I had to study up and become a mortgage note investor. Certainly you can. And it is much more passive than it is to be a landlord, but there's still a ton of education that goes into place. There's still a ton of knowledge. There's a ton of legalities. There's a ton of terminology. There's a ton of things you need to know to be a real professional note investor. It's kind of like me saying that I want to learn how to pull my own tooth because I have a rotten tooth. No, I'm going to let that be handled by my dentist. Okay. Yeah. He's the pro. I don't want to pull my own tooth. Well, somebody listening to this may say, well, gosh, maybe I don't want to pull my own teeth and try to become a professional note investor. Maybe I just want to work with somebody who's already a pro. They've got the connections, they've got the knowledge, they've got all of this. And maybe they don't want to invest in one note. Maybe they want their money to be diversified in a fund. So what does it look like for an investor, rather than them try to be the pro and do everything themselves, or just trust somebody maybe like yourself that has everything dialed and they can just put money in the fund? What's the difference? What does it look like? Why is it attractive maybe to an investor?
Well, because it has a very small footprint in their life. You know, most people today are pretty busy. Can we agree on that?
Oh, goodness gracious, more than ever.
Yeah, most people are pretty busy. And so they don't really want to go back to school to learn how to invest in notes. They like the idea of note investing. They get it enough to say, yeah, sounds like a great place to put my money or my retirement or my savings or whatever. But I don't know even where to buy a note, or they say, I don't know how to vet a note. I don't know how to conduct due diligence. I don't know how to price a note. I wouldn't know if I'm getting ripped off or not. That's where I step in and I say, look, I've got all that dialed up. All you've got to do is write a check and put that check into our fund. Our fund owns hundreds of notes, and now you instantly profit from hundreds of notes. You own a percentage of every single note, right? So you instantly profit from hundreds of notes, and you leverage my skill set, my contacts. I mean, it's the ultimate leverage tool for you as an investor, and you get good returns. Right? Our investors get really good returns. And by the way, they know what those returns are before they ever write a check. Right? We always disclose the returns right up front. So that's a powerful place for people to be. Completely passive, good returns, secured by real estate. You know?
And it's diversifying their capital. Like, you know, it's more of a safety net too, because, you know, that old term, don't put all your eggs in one basket.
Right.
Well, if you invest $50,000 of your money out of your IRA or 401k or what have you, and you invest that money into one single note investment, great investment. In our opinion, better than buying another rental property and putting another renter in there. So yeah, owning these notes is fantastic. But if you put 50 grand into the one note deal, no telling what will happen to that one asset. Money can be lost in the note investing space. There can be expenses, timing issues, all sort of things that go along with that. Now, if somebody took that 50 grand and put it into something like the Everly May Capital Group, that fund, that 50K is now protected or diversified amongst, like you said, hundreds of assets that are in the fund portfolio. So your eggs aren't all in one basket, and you're not just dependent upon what happens with that one singular deal. Yeah.
Right. And there's going to be some of these assets that do super well. Like you said, you can lose money in any investment, obviously, right? Otherwise, it's not an investment. But for the most part, notes are very, very safe, but it's possible to lose money. But it's also possible to make a windfall profit too. And in the note space, windfall profits come in the form of foreclosed properties, early payoffs, things like that, which I won't get into today. But just know that there are windfall profits and there are possibilities of some losses. But when you aggregate it over 100, 200, 300 mortgage notes,
No.
overall, it's wonderful. Our investors love it. I had 2 calls this week for people saying, I want to put more money in. Literally, Patrick. They're like, I'm already in for like 100 grand. I want to move more of my money out of the stock market over there.
Well, it looks like for them, right? They put the money in. They respect your and your management team's knowledge and expertise to be good stewards of their money, to churn it into profit for them and you. And they just write the check and then they start collecting checks every quarter. Isn't that right?
Yeah. Yeah. Every 90 days, we send them out their share, right?
Yeah.
Of the earnings. And so they love it. It's good. It's a win-win. And, you know, their biggest concern is like the fund that we have right now. One of the funds that we have is only a 7-year fund. And everybody's already asking, so when that 7 years is up, are you going to do another one? You know, let's keep this thing going because it makes sense, Patrick. It makes sense.
Yeah, and you know, we're gonna go quick here to another commercial break. Sorry to say, not sorry for our sponsors. They need their time. But you know, Des, when we come back, we're gonna talk a little bit about how the fund and becoming good at the money business and understanding how to run a fund and these kinds of things over the last couple of years have spawned some other opportunities outside of notes that now Everly May Capital Group is involved with, which can even better the returns of the fund. And we'll get into some of that exciting stuff right after this break. So folks, don't go anywhere. We'll be right back.